going on, YouTube traders, investors? Today we're going to take a closer look at Altria, ticker symbol MO. As you can see from the chart, it's not looking good. Let's get into it. All right, before we get into the video, there's going to be a link in the description below for Robinhood. If you use that link to sign up, you get a free stock, I get a free stock, it's all good. And you stand a chance of getting a Berkshire Hathaway, Apple, Facebook, GE, Ford, and many more. And remember that everything on the Robinhood app is free. You don't pay any fees to trade. That means buy or sell any stock. Also, options are free too. So please use that link. It'll be greatly appreciated. Thank you in advance. Before we get into the Thinkorswim platform, the chart again, I just wanted to point out the main positive in ticker symbol MO, Altria, is going to be this 8.11 dividend yield. Now, as you know, the stock price goes down, the dividend yield goes up. So we're sitting at over 8% with this particular stock. That's very good for a stock that has a 81.8 billion market cap. They pay $3.36 per share over 4 quarters. You do the math, it's pretty nice. A pretty nice dividend. All these numbers right here aren't looking good, and it represents what you see here. So just know this video is not going to be a lot of positive about Altria right now, but there are going to be things that we need to look for in the future as far as the merger with Philip Morris and basically big tobacco switching over to a healthier type of cigarette with quotation marks. So let's get into the chart. Here we are on the 180-day chart in the Thinkorswim platform. This is for ticker symbol MO, Altria. Now, you don't have to look too far to see something very glaring. That's this trend line, the support line, and the breakdown that happened. We also see a large spike right here. I'm going to take you through the timeline. Now, big tobacco has been slumping. You know, they're going through a change from analog cigarettes to digital cigarettes. Now we got a new player, but I'll get to that in just a second. What happened on the 27th of August, or I believe it was the 28th, was news of a possible merger between Philip Morris and Altria. And this caused this spike right here. You can see it went all the way up to $52, almost $53 on the news of them merging back together. So a lot of people don't know, 10 years ago, Altria and Philip Morris were one company. They divided and they both still sell cigarettes. Altria handles the Marlboro brand in the United States. Philip Morris handles all the sales outside of the United States. So they still sell the same thing. They still sell cigarettes, analog cigarettes, the combustible, the ones you gotta light. And that's gonna lead us into the e-cigarettes, particularly JUUL. Altria owns, I believe, 35% of JUUL, which equates to billions of dollars. I'll get into the particulars in just a second, but enter the new player that Philip Morris has, IQOS. IQOS is an e-cigarette, but you don't use liquids. You actually just heat tobacco, or what they call some form of rolled up tobacco. It looks like a miniature cigarette. And this is where things get kind of dicey, because I've been trying to figure out why would they merge together. You know, it kind of like, to me, just outside looking in, why would they do that? It's like no, they can't do that. but I think they're trying to help each other out because they're about to run into some major issues. Altria is with JUUL. JUUL is not approved by the FDA, and they're getting into big problems with teenagers, and they have these little flavors that the teenagers like. So that caused, I believe on the 13th of September, I'm not sure about that, but the Trump administration, no, it was the 11th of September. The Trump administration came out saying that they wanted to ban JUUL, or not necessarily all of JUUL, but all of the flavored liquids for the JUUL. So they just want regular tobacco flavored JUUL, not mango flavored JUUL. So because there's issues with people, there's something about a lung disease that they're linking to vaping. And I think there's been a few deaths. I want to say I heard about 6 deaths that have been directly linked to vaping. Now, I am hearing that it wasn't vaping the JUUL, that it was THC, marijuana, in other words, that they were vaping in the e-cigarette. Regardless, the FDA, the president, everybody is trying to ban JUUL. So enter Philip Morris with the IQOS. And me looking at it is, if Philip Morris can't sell cigarettes in the United States, Altria can. And this is not a vape. This is a heated tobacco product. You're still actually smoking a cigarette. I watched a video on the IQOS. Basically, it's miniature cigarettes called heaters that you insert into a heating device. It doesn't combust. It just heats up the tobacco and you inhale it. It's a very light vapor. And from what I'm hearing, it's really big over in Europe and other countries. Like, I've heard stuff that they won't allow cigarettes in a store and they won't allow you to vape in a restaurant or store, but they will allow the IQOS. So to me, that sounds weird, but it sounds like a money thing. So this whole merger between Altria and Philip Morris, I think they're trying to help each other out. They understand that JUUL is taking heat and they're possibly going to be banned. They're going to lose a lot of money. But another thing that I heard is that when Altria bought their stake in JUUL, they did an anti-compete, non-competitive agreement with JUUL. But I started thinking this doesn't compete with JUUL. This is still a cigarette. There's still tobacco. There's just no combustion. So, but on to that, like, I just think that this deal is going to go through because they need each other. So when the deal does go through, I think you'll see a turnaround. Tobacco, big tobacco is going to have issues going forward, but people are trying to be healthier. That's all there is to it. But you're never going to get rid of smoking. People are still going to smoke. So they're just going to have healthier alternatives, which is what Altria and Philip Morris are trying to do. We're all going to have our vices. They understand that this is a vice that a lot of people have and will continue to have. It is what it is. But we're going to back out of this chart and we're going to go to the 10-year chart. We're going to go back a little ways. Let's go here. And it's slowly getting there. There we go. We're there. I'm going to go ahead and take this line out because we don't need it. It's not relevant. And I'm going to look across from right here at the 41 where we're at now. I can see Altria going down to about $40, around the $40 range. I mean, so if you're looking to get into Altria, I would hold off and just watch it. I do think it's going to come back. But as you can see, this is a 10-year chart. Uphill, we've been downhill. But there's a possible bounce at around $40. You see right here, possible bounce around between 40 and 40.30, somewhere around there. We'll zoom in a little bit, check it out. It's right here. Could be 40.30. Could be. Not for certain. And if it doesn't stop there, we're going down into the 30s. But I really think something is going to happen with this merger. And another thing I want to point out, this IQOS, this thing that Philip Morris has, it is approved by the FDA. They can't sell it in the United States yet because Altria does all the United States selling of tobacco products. So just keep that in mind. These two companies need each other, and I believe it's going to happen sooner than later. But that's pretty much all I have for this. I just want to provide y'all with some information on what could possibly be going on behind the scenes with this merger with Philip Morris and Altria. Thank you for watching. If you like the video, subscribe, hit that like button, hit that bell for future notifications, and I will see you in the next video. Thank you.